Hi, dreamers. You ever do a sector review of your portfolio? Well, I've been looking at mine, and you may have noticed I've added quite a bit lately to the healthcare sector. So today I'm going to show you my thoughts on it and two stocks I've been looking at recently, NVO and LLY. Let's take a look. So as you may recall in my most recent portfolio review, this is my sector allocation within my portfolio. And two of the sectors that I've been looking at lately to beef up are my healthcare and information tech. And you may have noticed that recently I've been building up my McKesson position and also my UNH position to add to what is a pretty large already AbbVie and Pfizer position. So although I'm not concerned too much about recession, would really like to beef up my healthcare. So I don't know if you guys have ever looked at this, but this page on Fidelity shows just the overall sector information from communication services, consumer discretionary, consumer staples, etc. And if you click in, like this one with healthcare, you can see some of the bigger companies, the latest news, and some of the key stats. Now of this list, I already have Abbott, Pfizer, AbbVie, and UNH. But two that I've been looking at lately are Lilly and actually NVO. So check this out. In Seeking Alpha over the last month, you can see that NVO and Lilly had a sudden jump on the 8th of August, both of them, giving them both about a 20% return over the last month. And over the last year, you can see a 77% total return for Lilly and an almost 70% return for NVO. So what's going on with these two stocks? And what happened on the 8th? Well, there was a couple of things. This is the release from Lilly on the 8th of August that essentially revenue in Q2 increased 28% as a result of the growth from their relatively new product, Mounjaro. And they also reported some other positive pipeline news around their Alzheimer's products. But honestly, the big news is around the weight loss drugs. And I also wanted to point out to you, on the 8th of August, you can see Novo Nordisk also had a press release that essentially their weight loss drug also had positive cardiovascular benefits. So it's no surprise that both of these companies had a significant jump on that particular day. So as you guys know, I like to gather information across Dividend.com, Fidelity, TD, Ameritrade, Google, Seeking Alpha, etc., and drop it into my stock evaluation sheet. And here you can see the most important characteristic for Novo and Lilly. And as a reminder, you can see the targets that I have up here in green, where I'd like to see between a 2 and 5% yield, a less than 1% beta, or how volatile the stock is, more than 10 years of dividend increases, at least 10 years of dividend payouts, between 40 and 60% payout ratio, a 5% plus CAGR, and a PE ratio that's not more than 30. So for NVO, we've got about a 1.14% yield, a very good beta, only 3 years of dividend increases, a very long track record of paying out dividends though, an excellent payout ratio, a pretty good 5-year CAGR, or compound annual growth rate, over the last 5 years, and honestly a kind of a high PE ratio of almost 42. Then we take a look at Lilly. It's under 1% at only 0.86, with a very low beta of 0.3. Only 8 years of dividend increases, but a pretty good track record of 33 years of dividend payouts. Excellent payout ratio at 54%, a really good 5-year CAGR at over 14%. And take a look at this, guys. 73 PE ratio? That's higher than Tesla. That is astounding. And so you can see they really don't pass my yield test as something that's going to deliver cash flow in the short term. And they're both not delivering on the PE ratio. But what's driving this? So this is a great example of how I do a little bit of research. And I'm no healthcare expert, but I actually bought a share of Novo several months ago just to start monitoring this with all the news articles I started seeing around this. So what is going on? Well, essentially this is it. Novo is expected to see significant growth due to its focus on the anti-obesity medication marketed under the names Ozempic, Rybelsus, and Wegovy. Now, Ozempic is a medication used for the treatment of type 2 diabetes, and it also aids in weight loss. And there's tremendous demand for it. Now, in this article, one of the most exciting parts is just to see the available market. over 764 million people living with obesity, and only about 10% seeking medical help. Obviously, the market is incredibly large for these products, which really outlines the opportunity and why these two companies are rising in value so quickly. And so you can see how they're reporting sales growth of 25%, driven by the diabetes care. And as this article points out, it's not often we see companies of this size growing 25% year over year for revenue. And that the advantage of a mature company having this level of growth is that the timeline of these large revenue increases passing on to investors drop dramatically. They have a history of not only dividend increases, but also of stock buybacks, which you can see here in this graph, in terms of the share repurchases. And so it's very clear that the market opportunity is massive. But a couple of the risks that come with this include, obviously, regulatory risks as well as recall risks, which is a factor across the pharmaceutical sector. A competitive risk, which is where Eli Lilly comes in, which we'll look at in a second. But also they've encountered supply chain constraints, which they're rapidly trying to solve with a new plant in North Carolina. That's actually been one of the things that's held them back the most, is just lack of supply with the overwhelming demand, because they have been the first mover in the market with this type of medication. But on the positive side, there could be this stickiness of these medications. In other words, once you go on them, it's reported so far, it's hard to go off of them. And also the potential for wider insurance coverages as the popularity and demand of these gets higher and higher. Here's another article on Novo that also talks about the consistent buybacks, strong commercial execution, and the fact that the stock has returned 157% over the last 3 years, which is almost triple the S&P 500 return of 48%. That the biggest concern is the valuation, or what I had shown just a second ago with that higher PE ratio. They also talk about the fact that NVO has been a first mover with Ozempic, and has also capitalized on that opportunity with developing Wegovy, which is essentially a higher dose version of the same medication. But here we go again with a mention of Lilly as the competitor, that if they get approval to market their drug, it could be the most potent obesity drug on the market, and that in their late-stage trial, patients lost an average of 15.7% of their body weight. And so it's clear that NVO would have way higher market penetration already if it wasn't for these persistent shortages, which in the earnings call they said is driven by higher than expected volume growth, in other words, demand, and temporary capacity limitations at some manufacturing sites. And so here comes Eli Lilly, on the heels of NVO, trying to capitalize on this massive market opportunity. And in this article, they also talk about the fact that both Lilly and Novo has bucked the trend of underperformance by large pharma in 2023, with Lilly's share up 44%, and over 420% over the last 5 years, and Novo over 21% up, and over 230% over the last 5 years. And so what are some of the risks and barriers for Lilly? Well, first they need to secure approval for their weight loss drug, which looks likely and could happen in September. They have to also ensure there's sufficient supply to meet demand. There's also been a little bit of noise around potential mental health implications of using the drug, and this is a brand new drug. It also makes a note here, just in the future, how long this patent could be held, and that it could be held between 10 to 15 years. And after that, the entire weight loss empire would be subject to generic competition, which is likely going to be fierce. But these last two sentences basically explain why those PE ratios are just so high. That essentially, the implications of a successful, safe weight loss drug that is addressing a market of a potential 2 billion people worldwide is mind-boggling. And one of the most fascinating parts of this story is the actual origin of these weight loss drugs, which was reported in the Wall Street Journal and recapped in this Bazinga article. Then actually, if you do research on this, these drugs have been in development since 1980, when researchers first started studying the anglerfish and found a hormone that was later found to encourage insulin release and make people feel fuller faster. The only problem with GLP-1 is that it disappeared from the body quickly, which takes us to the next incredible part. Other researchers were studying the Gila monster venom and found a peptide that was similar but actually lasted, I believe, in a 24-hour cycle. And there was actually an early drug developed in 2005, which has now led to the modern Ozempic and Wegovy blockbuster drugs. So when you think about it, this overnight success has been going on for about 40 years. And I actually tweeted out that I had purchased one share of NVO for $138 just to start receiving all the news so that I could do more research on my own. As you know, I like to do. And of course, now the share price is well over $180. Which brings me back to the PE ratios. And I wanted to just bring this back up one last time, because sometimes you need to break a rule when there's an extreme outlier or exception. When the multiplier is actually expected, and the companies have done something so remarkable, so incredible, that you actually believe and expect these PE ratios. But in order to think that way, you have to be sure that they are solving a massive problem. Do you think that they're doing that? Only time will tell. Now, some people may say you've already missed the boat, but for me, I'm thinking about the following. I think the next 10 years look really bright for both of these companies. And I think the market is so significant, there's room for both to play. Not only in the US, but with NVO being Denmark-based. Those are additional markets that are up for grabs. It's clear that NVO is the better value right now. But as a US investor, you also will incur ADR fees, and I believe it's only paid semi-annually as well. So I already own a little bit of NVO, and I think I'm going to start adding to it pretty soon. And with Lilly, I might wait for a near-term dip and then pick up some of the LLY. I'd be curious, what do you think about these two stocks and the market opportunity that we've been talking about? It's probably one of the most exciting, widespread markets for pharmaceutical out there. Let me know in the comments what you think. Well, that's it for today. If you want a richer real-time experience with me, you can always follow me on Instagram or Twitter. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want. No pressure. And as always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I am not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.